This conference will now be recorded.
All right, so welcome to our workshop. As always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. All right, so let's first start off about talking about how we can understand and what characteristics we need in order to understand what the puzzle of a stock is. All right, where do you think we start? Okay, we always need to have a starting point. Okay, and when we're looking at the stock's puzzle within itself, we're going to learn how to apply the puzzle to what's actually happening, what our expectations are, but we have to start somewhere. So, what's the first characteristic, the first variable that we need within a puzzle? Prints, averages. Okay, so no matter what, we're always going to need prints. But to understand a stock's puzzle, do we actually need prints? Understanding what the chart's going to look like and what the stock is going to do is one thing, but do we actually need prints to understand what the puzzle looks like? Or what the possibilities, that's what a puzzle really is when you're looking at a stock, is does it have a possibility of doing something? It's not necessarily looking at it as a trade at this point yet. So where we're going to start is with our range. Okay, range is the most important part of understanding what a puzzle can be. Okay, because the secondary part, which is, that word where if you use it, most likely you're going to be right almost every single time. But what's the second part of understanding a puzzle? We need the range, first of all. But from that range, we need our volume. Exactly. Now we need our daily volume. Okay, our puzzle isn't going to necessarily be what's going on per minute on our minute chart. It's going to be what the overall of the daily volume is going to be. So I just have Billy up right now. Okay, and if we take a look at it, we can see our averages right here. Okay, we come over to our volume. It trades on average about 14 million point four, shares per day. Okay, so that's just the total amount of shares that it's actually trading per day. Okay, and when we come up and we look at our average, now the reason I have this example up is because can I really use my average here? Can I use my average within this? And we were talking about this yesterday. It's ironic how whenever I'm about to do something, some type of example always comes up because these things are going to come up day in and day out. So no, we have above average daily volume today. Well, so not only is it based off of today, but if you look at everything that's been going on, it's very skewed. You have a stock that, after in 2021, pushed over 150. Okay, coming back now, is that going to affect our range and what it's saying right now? No, but we're starting to see it, above average movement, and this number is going to be very skewed in what our expectations can be. Okay, so that's something that we have to look at. Not every stock are we actually going to be able to use our average. Now, what is the average? Because we see it there, we use the number, but what does it actually mean? What is it the average of? What is it the average of? So when we see that range and we use that number to try to make calculations and try to understand puzzles, what's actually happening? What's it the average of? Okay, so price movement, absolutely, but what kind of price movement? Okay, we need to specifically understand the tools that we're using in order to really understand how to be able to use them. So what's it actually measuring? So daily, okay, we got to be more specific than that. Price movement from open to close, kind of. Its average move from the open of the market at 9:30 to the close at 4 from top to bottom. So the full range from to the high of day to the low of day. Okay, it's averaging that number. That's the number that it's using. So a stock can move, let's say a stock has a $2 range. Can a stock move $8 that day? Technically it could. It could go up $2, down $2, up $2, down $2. Of course it could. Okay, but what would the actual range in this situation be? And as I just said, our average range is actually $2 because that's what our expectations from top, low of day to high of day is. Now, what's it measuring? What is it using to get that average? What is it using to get that average? Obviously, it's using a day because we're putting it on the daily chart. Okay, but how many days is it using? Anyone ever ask that question and ask why? So not 60, damn close, but not 60. Not 20. Yeah, see, I was thinking about this. I was wondering, do people actually know what they're using the measurements of? You're close at 60. I'm going to be quite upset if not one person. I bet you a bunch of people are formatting right now to see. But it's 63 days. It is using 63 days of data to come up with that average. Again, we need to understand everything and what it's actually doing in order to understand how we can utilize it. Now I have another question for you. Why 63 days? Why is it using 63 days? There you go. 3 months of trading. Typically, there's 20 to 21 days in a trading month. Okay, so we just used, the extra couple days wouldn't really matter. So 63 days. It's 3 trading months. Why do you think I came up with that number? Why why 3 trading months? And why do you think we use that number? Why is 3 months what was chosen for it? Yeah, it's a quarter. Okay, and it's also going to allow for anomalies because is the range going to get skewed because it has one crazy day? Taking into account 63 or 3 trading months. If it has some crazy day that news comes out and it just acts, completely out of pocket, is it really going to skew the numbers? No. Okay, it would take way more than that. You're talking about you're going to have, weeks or so of, or, a week or so of, something crazy going on. And that would just be a complete change of personality, almost like what we're looking at in Billy right now, looking at this daily chart. So now what are some of the other ways that can skew our numbers big time with range? There's another scenario that can really screw up what the stock's range is and its average. And it's probably the most common. Well, low volume really doesn't mean anything because is it still going to have a top to bottom throughout a day? There we go, David. Rapid drop or increased price of the stock. So if you have a stock that's trading $100, okay, and let's say something happens overnight and now it's trading $20, can I expect it to have the same type of range that it would have had? Of course not. Something that's really cool, though, and you'll notice, and when I say really cool, I mean it's great for trading, is that a lot of times stocks that happens to actually take a few days to get back to being a normal stock. So sometimes, when you'll see that, a lot of the time, you'll see like $100 stock turn into a $30 stock, and it still trades a couple days like a $100 stock. So you still get to see that big range until it kind of falls into the trading style of what the new price of the stock is going to be. So just something to keep in mind. But that's something else that will really skew our range up, which hurts our ability to, to really understand any type of puzzles. Okay, but now we know, so our range and our volume. So what are average? How do we put them together now? Well, when we look at our average, I'm going to take Billy away because obviously this is not something that really fits the, obviously we can't use it because this one is skewed. But let's take a look at a stock like AMD. All right, what are we using for average range? So we can see $3.10, it moves on average. How much volume does the stock have to have in order for us to expect $3.10? How much does it have to have? And let's use this number specifically. We look at AMD over the course of an entire day. At what number would we now be able to expect a top to bottom of $3.10? Yep, right around 71 million shares. So when we see it come, we basically what we want to do is when we're coming into the morning time, especially when we start to go over a few examples in a second, but when we're coming in to the morning and we start to see the stock move, what we want to do is we want to actually go out there and we want to see the amount of volume that's coming in. Does it have a chance to make this? For instance, today, should AMD hit its average range? Should AMD hit its average range? Now we would bring our minute in. Obviously, our minute is today's full volume. Okay, but do we expect it to get to 71 million? It is now 1252. Do we expect it to get to 71 million? No. So if there was a position, let's say that came in, okay, and it tells us that it has the ability to go under 70.50, am I going to expect that for today? Without some drastic change in volume? Absolutely not, because it's not going to be a high percentage. So what I also want you to understand about something is a stock that does have its average range, but has way lower volume than what the average is. What can I almost guarantee about that stock? A higher range for that day? No, not necessarily, because if it's hit its range and it's on very low volume, what does that mean? What can I actually understand? So reality check, that's possible. We'd have to add prints in to understand that. Okay. But there's something else. What can I now expect about triggers? Because if a stock is making that large of a move on that low of volume, is it really being traded? Or is it what we like to call floating? Can I make the assumption a stock, when I look at the puzzle and it doesn't match? Yeah, so if I see a stock that's floating, guess what? I understand something that I'm going to have to make sure that my entries are really perfect, because there's going to be a lot of the movement that's actual floating. So what's going to happen, it's going to look like a trigger and it's just going to come back on you. And if you actually look at AMD, you can see that's happened a ton. There's not a lot of that clean, just, after a trigger coming in, that clean breakthrough type movement. Okay, ever since you look, after past 10 o'clock, which is going to get to David's question right now. And he said, Rich, what time of the day on average would you like to say volume to reach half of the expected daily volume? By 10:30, the latest. I really would like to see it somewhere around there by 10 o'clock. That's best case scenario, because what does that tell me? If I'm already at half the average volume by 10 o'clock, what does that tell me? What's the interest level in the stock in comparison to average? It's being traded. Now, that doesn't mean in the beginning of the morning. That's why this is the easier trade. I don't want to say easier, but the trades that happen the quickest are typically going to be in the morning time. So 9:30, as long as I'm trading a stock with any type of volume, from 9:30 to 10 o'clock, I don't really have to worry much about what the puzzle says yet. Okay, unless it makes a very quick move right at the beginning of the market and hits its full total range. Then at that point, I'm going to use prints. We're going to have to use our volume, but I'm going to talk about something in a second that really I don't think we've ever actually. I mean, I've implied it, but I don't think we've ever actually just directly said it before. So let's go to AMD. Let's just, for easier numbers, okay, for easier numbers, let's use its average range is $3. Has anyone ever sat there and thought how many increments the stock can actually move that day? So we're trading in 50-cent increments and it moves $3. How many increments can it trade that day? By 10:30, but I'd really like to see it at 10, Keith. Yeah, it could trade 6 increments from top to bottom. Now, again, does that mean that it's not going to be able to make trades throughout the middle part of that range? Absolutely not. But when we are seeing where the top is coming from and when we're actually looking for our trade, for instance, if we're looking for a number one trade, when the stock goes up, once it hits that point for our trigger back down, the max that I can expect now is 6 increments. So it starts to make you think a little bit. Within that 6 increments, the first time it surpasses an increment, don't I have a great idea of what prints it took to do that? And when I say I have a great idea, they told us because we saw it. It happened. But now I know what prints look like to move it that 1 increment. Okay, if it moves 2 increments, I know what that looks like. So now I can utilize that in what I'm actually looking for within my prints. Understanding the puzzle of the stock doesn't only allow me to know about the high and the low of the day, but it also allows me to understand what it's being gapped in and what the actual cap is going to be. Because if I'm going to draw a chart, okay, of AMD, and I draw a chart that has over 6 increments in the beginning of the morning, am I going to be correct? I want you to think about that for a second. Okay, sometimes there's stocks that are going to move, that only move, $2, okay, or $1.50. That's only 3 increments. So if I get huge ask prints, can I be expecting 4 increments just because there's huge ask prints? Whether it be a pullback or a move up, it doesn't matter, top to bottom. Can I expect 4 increments? And the answer is I can't. So when drawing the chart, the puzzle literally helps us outline what it could possibly look like. And now our charts that we draw are always going to be perfect. When we go into drawing charts, are they always going to be perfect? No, of course not. Okay, there's going to be things that happen that can manipulate that chart because right now in AMD, it's only showing 6 increments, right, overall. Okay, so if it's 6 increments overall, what could change what my chart looks like? Well, obviously volume. If I start to see, let's say news comes out, I see huge volume being pumped in, does that change how many increments it now has the possibility to move? Of course. Okay, I want to use an example from earlier today as well. Okay, I want to use coin. Okay, so we look at coin right now. There were prints that before that came in at 42.50. Okay, so 42.50, okay, bid prints. That was earlier this morning. So when we get those 42.50 bid prints and we start to look over here, what's our puzzle telling us about volume? How do we figure out this puzzle? So first, what do we have to go to? Well, we're going to look at our average range. It's $5.27. Now we're going to look at our daily volume. Our daily volume right now is 8 million shares. Is this going statistically to break 42.50 right now? It's not. So a move under 42.50, can I have a real high percentage trade with the puzzle? So as you guys know, I'm not about taking percentages off trades because, there's always a reason that you could find not to trade something. It's when you add up the things that it shows you should trade is where real high probability trades do come from. Okay, but looking at this stock right now, any move underneath, I can't expect it to really do anything unless what would have to happen? Okay, this puzzle is actually going to allow me to set up a game plan of the only high probability trades that I can make. Change in personality. So essentially, big volume would have to start coming in. We'd have to see big volume. And as there's a reason right now, because if you think about it, is this at its range yet? No. But when we look at the actual movement itself, okay, it's moved $4.35 on average 527. There's another part of this puzzle, though, that we haven't talked about yet. Because technically, we're not at range yet. Now, we expect, that we don't expect for it to get to the full day's average volume. So that's fine because it's close to it. So it shouldn't even be that high. But I want you to think about something else. Why is the average $5.27? Yeah, it's been getting the price is way lower than what the average is actually taking into account right now. So at this point, based off of all the information that we have, we know the range shouldn't even be at 527. Okay, and looking at 4250, okay, even though it has bid prints there, and they weren't a lot, I think it was 5 prints, okay, which at the time, definitely fit over print personality by like a couple prints. It wasn't anything special, so it looked shorter term, but it really wasn't a trade to that downside. Because when we take into account everything, the $4.35, which is probably way higher than it even should be moving, the amount that it's got beaten down within its price. So 527, it should be lower than 527. Volume's way too low. This doesn't make sense. So what do we know about this? Well, number one, if I'm going to short this, what has to happen for me to have a high probability trade? What has to happen for me to even think about being able to short this? And this is all based off the puzzle. What would have to happen for me to short this? And it's not just an increase in volume or anything like that, not even a change in personality. There we go, Davis. It would have to come back to the range of info. So basically what that means is I would need this stock to pop up. And I can only short it when it's at a spot that's somewhere within this top to bottom. Because then when it gets down to 42.50 again, is that a big deal? No, because I already have the room within my trade. So let's say, they break it down a little bit, but then they bring it right back up and they start playing games around it. And it doesn't really matter because we're already in from such a better spot. Okay, we try to do that always, but when a stock is actually, the puzzle doesn't make sense, like this does not. Okay, in this case, we have to. There's no other option. We can't take a trade anywhere near 42.50. I can't even trade. If it's at 43, I can't even take a late trade on a trigger. I'd have to have a perfect trigger. So I'm going to need it to go to like 43.50, somewhere that gives me enough range getting to that 43.50 and getting to that range of 42.50. Okay, because that's just what the puzzle is showing. Now, based off of this puzzle, the example that we just used right this second, okay, what do I also know about trying to trade this? Is it getting traded or is it going to be being floated? 100% floated. Because if you look, it's done it the entire time. Look, all these bars, I mean, there's really no real entry. Maybe this spot right here, but I mean, that's garbage too. There's really no spot to even be able to enter there. See, when our puzzles don't make sense like that, and it shows that it's done too much and that there's more float that's going to be within it, us trying to take triggers, okay, they're going to work out way less often. And why is that? Why is it going to work out way less often? Why am I never in a situation like this ever going to have a 10% trigger or really anything over a 6% trigger, to be honest? Why is that? Why is just because a stock moves and it's floating, it not something that gives us a high percentage, even if it looks like it does? So not enough volume, but if a stock is floating, are there triggers? What is the word? What does trigger mean? When I take a trigger of a stock, what does that actually mean? Triggers show it's time to make money and it requires it being traded. There you go. It's time to make money. If it's time to make money, is no one going to be trading it? No. So what's happening is it's legitimately just floating around. And has anyone ever got caught? And obviously I know the answer to this, but it's like, let's say it's 10:30 now. Okay, you've had a good morning and stuff, and all of a sudden 10:30 comes in, and you just keep, every time you think it's a trigger, you just keep getting shaken out. So you start with a great morning, and all of a sudden, past 10:30, you're just getting shaken out over and over and over again. It's like any trade that you take, you don't even understand how trading works anymore. Even though it shows on paper, it looks like perfect trades. Anyone ever see that before? Obviously, we know the answer, but it's because of that. Once we start to see it going to that floating stage, it still looks enticing. It still looks like movement, but we can't trade if someone else isn't trade. So if they're floating, us trying to enter within that float really doesn't give us a high percentage unless there's so many variables that come into it that give us, something like 90%. Okay, but how rare is that for us to actually see? See, the problem isn't that trading the float, it's actually being able to enter within that float. Because what's going to happen is that you're just going to keep seeing yourself getting shaken out. And what's another problem with floating? So let's say I'm up 30 cents right now and a stock's just floating around. What can it do at any second? What does it do to my exposure? All based off this puzzle. Yeah, it makes my exposure a lot more dangerous because all it takes is for one person to actually come into it to want to trade it, and boom, stock is right back wherever it wants to. The stock could go up, especially AMD. Okay, it could go up $5. Shop can go up 50 cents in a bar. We've seen it happen before. Okay, but again, it all comes down to what our actual puzzles are. Okay, let's do another one. Let's do. This is a good example. Let's do Oxy. All right, so Oxy looks like a beautiful trade today, right? I mean, $3. Okay, on average, it moves $2.47. What does the puzzle tell us? Remember, our puzzle's more of an overall than just a one thing. It's more of an overall chart that we're looking at. Okay, but what does our puzzle tell us here in Oxy? Should it be at $2.97? Should our range be at $2.97? Check, check. So slightly overextended. It's traded now at, coming in, it's 10 after 1. Okay, from 10 after 1, it's showing us that it's only traded 7.3 million shares. Are we going to get another 7 million shares, statistically speaking, from 1 o'clock to 4? Absolutely not. Statistically speaking, it's almost impossible. It's just not going to actually happen. So when we look at this overall, a stock that typically would trade every day, like a BABA or any of the type of market stocks that we're going to see trades in every day, and we see puzzles like this, what does this move actually mean for the move down? If this puzzle doesn't match, that it should not have moved down this much in the way that it did, what is that actually telling us? Because if I trade Oxy every single day, tomorrow, what would I be looking for? Would I expect it to stay down? Yeah, the second I get some ask prints, I'm going to be looking for them to be shorter term. We always talk about in the afternoon when things are dead, like, the things that we can do. And one of them says go out there and find puzzles that don't make sense for the moves that we have. So we can just keep them up because not for nothing. How many stocks this morning did you have on your radar to actually be able to trade? That would make sense to be there. I'm not talking about stocks that you trade every day. Okay. And I'm not talking about, but how many new stocks were out there this morning? There was not one. It was disgusting. Absolutely disgusting. There was just nothing that was going on. Even, I obviously XPEV, but that trades a lot of volume every single day. That's just what its personality is. Okay, but overall, there was absolutely nothing new for us to go out there and look at. So we could have a list of stocks that their puzzles didn't make sense for and look for those prints once the market opens. Because we need something to put on there to scan for. So instead of just having a hit, rapidly rising and rapidly falling the second that the market opens, what we can do is we can have those already up. So when we start to see some volume come in, if we get the prints that match that puzzle, does that add a new variable to our trade? Does that not make our trade a higher percentage at that point? Of course it does. Okay, I know for some of you guys, this is just a refresher. Some of you guys, this might be brand new, but these are the things that we have to look for. The range is not just there for the range to be there. It allows us expect realistic expectations based off of the numbers, because again, the numbers don't lie. Because even if they lie today, even if it makes no sense today, it has to eventually come back. And if it doesn't come back, it's just going to make a brand new average. And at that point, it becomes, it now averages out to what it should be. Okay, that's why it's not 6 months, because 6 months is a long time. That means it would take 6 months for a stock to actually, that's why it's only a quarter. It's 3 months. Okay, going back to the 63 days at that average from the top to bottom that we use coming into there. Okay, but so let's just recap for a second. Okay, when a stock is floating, when that doesn't have the volume to make sense for the movement, what does that tell us about triggers? Lower percentage, not going to be reliable, because again, a trigger is telling us somebody is looking to trade it. If nobody's trading it, can it really be a trigger? And the answer is no. It's movement. It's not someone saying, okay, time to make money, come in with me to make this trade. Okay, what time do I want to see about half the volume? About half the volume of the average I want to see by what time? Right about 10 o'clock. Now, don't get me wrong. If it's into 10:30, 10:30 is still going to be a little bit rough. So really like 10:10, somewhere in that area, but really around 10 o'clock, because should there be a stock that we really feel comfortable and someone's adamant about what's going to happen when they're putting the prints out there, should they not be able to get halfway? Think about it. How much volume happens in the beginning of the morning? It's at least, uh, I would say more than a third, but most of our volume we're going to see between 9:30 and 10. So if that's where we're going to see the biggest influx, we want to see it be getting, close, because as the day progresses, these days we're not going to be expecting more volume. We're going to expect things to start to slow down, and when things slow down, it's just never going to actually get there. Okay, and then we can now understand again, like I said, understanding what the overall, how many increments. Okay, so if it can only move 6 increments, I can't be planning a trade for 7 increments. If it can only move 3 increments with its average, I can't expect it to move 4. So if I see the largest amount of ass prints in the world and I think it's 4 increments, okay, for the pullback on a number one trade, but the average only shows me that it can move 3 increments, well, guess what? 4 increments would be wrong. That would be a completely wrong price target. I would have to, when I'm looking to draw my chart, I'd have to start with the 3, because that's what the average range actually shows us. And again, next week when we start going into actually drawing these charts, you're going to see how we implement this in with what our expectations are going to be, especially when we start to get to highs and lows of what the range actually is. All right, guys, do I have any questions? Again, this is something that we're not going to be talking much about in class. That's why we did this today. But it's going to be completely needed to understand as we start to move in there, being able to see, does the puzzle match? Does the puzzle not match? Because it's going to allow for expectations of what we're expecting the chart to do. Can you make a comment on Volume Valley, BA not trading? BA? Oh, verse. Make a comment on Volume Valley versus not trading. So technically, a Volume Valley would be something when a stock still has way more room. Okay, so when I look for a Volume Valley and versus it not trading, it's somebody that's in the stock that already showed us they're adamant about trading it. Do you see what I mean? So if someone came in to do something and there's no way that they're just done now and they're going to stop trading it, okay, that's what we take a Volume Valley at. Did you hear the end of my comment, Davis? Check, check. So again, so when we're like, I would expect a volume valley, we come out of a volume valley with more volume. If someone's adamant about doing something that they wouldn't have done, to set up a stock and then just they wouldn't stop trading it, we can expect volume to come back in versus if a stock really is just tapering off and there's nobody adamant that's in it that needs to accomplish what they showed us they need to accomplish, that's when we can expect more of a just the stock is done. It's just not actually trading anymore at that moment. It's the easiest way to look at it. Expectation is that someone is still in the store, in the stock. Yeah, exactly. And not only someone that's still in the stock, but someone that's in the stock that showed a shorter term. And they're kind of just sitting back, letting things happen. They might be, taking a little bit here, a little bit there, and then once they're ready, they come straight out of that valley. We can have those expectations. All right, guys. Any other questions? All right, beautiful. So let's make sure that we carry this into next week. Like I said, our classes begin 10 a.m. on Tuesday. I will talk to everyone in the chat, and happy trading.